All right, let's take a look where we stand right now. In and out of session lows, down about 182 points. A lot of the issues that were running up on the talk that we might get a trade deal now running down on fears that not only we're not going to get one, but it's going to cost us a lot ahead of even struggling to get one, with the holiday shopping season looking to be a lot pricier if you consider some of the goods that China has just slapped additional tariffs on, taxes, if you will. You pay them, not the government. Better than 5,000 items affected there, better than $60 billion worth of goods. Of course, we have done that, the same on $200 billion worth of Chinese goods. So why is it in the middle of this? Market watcher John Tobacco says, everyone calm down. I still see Dow 30,000, which would be about a 12, 13% ride from where we are. And by the way, John sees it happening by the end of October. That's about right. Is that right?
I think it could be right.
Okay.
You know, my crystal ball has worked in the past.
Because you seem to be vacillating.
I'm not vacillating at all. At 20,000, I said 25. They all laughed.
You did
at 25,
you did indeed.
I said 30.
That other hearty laugh you hear is one of the finest people at both networks here, Charles Payne. What do you think of what he's saying, Charles?
I don't think it's unreasonable. Maybe October is soon, but it's
his
not
prediction
his prediction.
He might be unreasonable.
He is. Well, that's a whole different story. We only have an hour left in the show.
Thank you.
But listen, if you get back to fundamentals and what we're seeing, the underlying economy, the earnings picture has been huge. Remember the first quarter, the numbers were so phenomenal, and the COO, right, Caterpillar, was it Caterpillar? Yeah, she said something about a high water mark, and Wall Street took it and ran with it, and this is it can't get any higher. Then the second quarter blew them away, and now indications are for the third quarter to do the same. So, I don't see fundamentally why we couldn't be at 30,000 at some point this year.
All right. What is the bullish case for you, John?
Well, I think back February, March, I thought after the second quarter, then people can see, we'll start seeing, wow, these tax cuts are really sticking. And there are other effects from these tax cuts. And now people are seeing growth at numbers that Obama said could never happen. They're seeing household wealth, the highest ever in history. Unemployment, the lowest in 60 years. African-American unemployment, the lowest in history. And now people are starting to really believe the Trump train is still on the tracks, and it's full steam ahead. No one wants to get in front of it. And I think these growth numbers, and there was 1.7 trillion out there that's starting to be repatriated back to the U.S. And as that money comes in, coupled with the tax cuts, people are starting to get paid more money. Maybe a little inflation, Neil. They may raise rates just a little bit, but that's good because that means people are making more and they're spending more. And I think a little inflation might even be healthy right here.
All right. Well, the Federal Reserve is expected to raise rates this week and maybe an additional hike later in the year. Can you live with that?
Yeah, and I think Wall Street can live with that because the expectations have been in the high 90s for both. So that wouldn't be a surprise. It will be interesting, of course, to see what they have to say on top of that. I think it gets back to two things. To John's point, the American consumer first showed enthusiasm in these numbers, and now we're seeing it in actual spending, and they can keep it going for some time. Debt to disposable income ratios are significantly lower than they were in 2007. And now businesses are making huge investments, the kind of investments, I get excited about those trucks, right?
I know.
But we're seeing it on both sides, businesses and consumers. And
we should explain your premise. When you notice that a lot of these big trucking concerns and other ones are seeing Boffo business and all that, to you telegraphs.
Well, they ordered in July. They ordered almost 53,000. Now some of that might be expensing, stuff, but that's the highest number in history and one of the slowest months historically.
So
you don't make that kind of investment.
You can fill them up, right?
You got to be confident. You got to say, I need that as a business. And by the way, it's a long-term thing. It's not that I'm going to need it for this holiday season. I'm going to need these to meet demand over the next 3 or 4 years, because as a business, you never want to be flat-footed when demand is there. If you miss that window of opportunity as a business, then that's one of the biggest sins you can commit.
We're hearing, because of the trade back and forth, we're going to look at a pricier Christmas shopping season. What do you think?
I think there may be a little bit of a price, but I also think that companies are now starting to believe in themselves. With interest rates coming up a little bit, then people are getting more easy access to capital, so people can start small busices, can make that extra money.
And they can weather pricier
and they can
Christmas
weather
gifts.
a little pricing. I think when you think about it, it's really patriotic to think if China wants to rip off the U.S., let's get more stuff made here, and I'm willing to pay a little more for stuff that's made in America.
He's got to convey that, though. I don't think he's braced people. First of all, the tariffs are what we pay, not what governments pay. But if he were to prepare the American people for that possibility, that would be
I
better.
said that a lot right out the gate, and I still believe that. I will say though, Wall Street has to make up its mind. You know, this over the weekend, J.P. Morgan put out this report that everyone's talking about, and they said potentially this could hit the bottom line, the S&P bottom line, by $7 for the year. Either it's going to hit corporations or it's going to hit consumers. They can't have it both ways. So if consumers are going to pay the price increase, then it won't hurt earnings at all. Now, if you can't pass it on, that's a different sign. But what we've seen in more and more industries with pricing power anyway.
Yeah, but it's not a given. Let's say that there's a 10% tariff, right, John, that the company is going to pass that entire tariff along, right?
No, but you would expect that they will just put that into their cost of goods, and then the consumer will ultimately pay. So Charles is right. To Charles's point, this is not going to hurt companies. This is going to hurt people. And I think the little bit that it's hurting, Trump's already done a heck of a lot for those people because the tax cuts and the deregulation have helped them grow their businesses. And I'm willing to pay another 25 cents, Neil, for something that's made in America if that means we're not going to get ripped off by China.
Well, you're a multi-gazillionaire. I mean,
Not like
rounding
you.
error for you. Real quickly, guys, and my producer's going to kill me here, but the thought on the president and all these unknowns, these invariables, certainly when it concerns Rod Rosenstein, when it concerns his own Supreme Court pick, the Mueller investigation. If he's in trouble, does the rule still hold? The market run-up is in trouble?
More so when there's a lot of question marks out there. When this Rosenstein news broke, it was obvious the market, which was already weak, though, got a whole lot weaker and a whole lot quicker. So, we're really, we want to see more stability out of the White House.
It's better to see the president in there than not in there?
The president is the key factor to what's happening right now, Neil. And Rosenstein in, Rosenstein out. The market just shrugs this stuff off. The macros are huge.